So the economic pain is far from over, as of course, U.S. consumer confidence is plunging and is expecting to go down from here. And obviously, as we've been telling you, there might be more devastating economic ramifications than there actually will be from this entire sickness. And that looks like it could be the case, as Goldman Sachs is now forecasting a negative 9% rate in the GDP growth. Negative 9%. Second quarter, 34%. So astounding numbers, and already after just the heels of a major bailout. And now, ever since that major bailout, we saw Nancy Pelosi right away start talking about a second bailout, second $2 trillion bill. And now CNN is talking about the same things. And so is Donald Trump, as he's passing around the idea of a $2 trillion infrastructure bill, showing a signal of more bailouts, more government intervention, which is just absolute insanity. Tim Picciott, the Liberty Advisor, you're here. This is your forte. This is what you're good at. What's going on with the economy, and how's it looking in your eyes?
Well, first off, thanks. That was the best pronunciation of my name I think you've done so far.
I'm trying. I'm horrible at pronouncing names. Sorry.
Yeah, no, thank you for that. So yeah, this is definitely not over, and I can't stress enough that I swear for like the past 12 years, I would wake up, just guys give you a little insight of what I do, and I'd check my phone immediately and say, is today the day the world ends? Is today the day the stock market is absolutely crashing? Is the event here? And I'd say the past 2.5 weeks, I haven't really been doing that when I wake up, because we're already here. Everything that I've been trying to warn against and been trying to, guard against is already here. We're seeing the Federal Reserve, that they are stepping in and buying everything. And I can't stress enough how important it is to let people know that the fact that, it's not our money. Our money is the money that we are using right now was borrowed into existence. So there is no way to pay off the debt. And if you don't address that issue, everything else is tiddlywinks. Nothing else even matters. And, and it's just, absolutely maddening to see that the Fed's coming in. They're buying up corporate bonds. They're buying up municipal bonds. They're talking about buying stock. They're buying treasury bonds. They're buying mortgage-backed securities. They're creating all sorts of different special purpose vehicles to be able to do so. And now, we'll probably tease this for another video, but a lot of people have been coming up to me and asking, Tim, I've seen that this is some 4D chess, and that Trump is really, nationalizing the Fed, and it's a big end run around. I know,
and he's arresting Oprah Winfrey and Tom Hanks for child trafficking. That's another thing I heard too. Real serious, that this whole sickness is all a plot to go after Oprah and Tom Hanks. Sorry, go ahead.
I didn't see that. I didn't see that one, but one of the guys
it's in the Q drops. You don't watch the Q drops? Sorry, go ahead.
No, sadly, I did not watch the Q drops. I mean, my initials are TTP for trust the plan, and I don't trust the plan. I mean, there's, it's just like, oh, well, how could he have predicted all that stuff? It's like, well, I had a fake news list go viral before anybody else on Facebook. I was calling out for, that Trump would win and that they would blame it on the Russians, going back in a video I did in September when I had like 50 people following me on there. But anyways, enough about me. We've got the Fed's balance sheet. You look at this right now, just going straight up. I mean, absolutely insane. But the thing is, everyone is under the impression right now that, what we're going to do now is that this is what, fixed everything, and that it's a new day for America, and that everything is going great now. But, that is not the case. That is absolutely not the case. And, this is, this is only the beginning, because this was able to, temporarily satiate what's going on now, but what's going to be going on, later on down the road when it's, a $10 trillion bailout. Oh, and then we've got another $15 trillion bailout, and it keeps taking more economic heroin into the system to get a bigger response. But eventually, if you keep taking economic heroin, eventually it's going to kill you. And that's exactly where we're at right now, that we're just in this complete craziness. And I do want to bring up a very important point of another reason why the markets went up, quite a bit last week. Now, the pension funds. How this works is the pensions have a certain allocation. I mean, every pension fund is going to be different. They all have what they call investment policy statements. And so let's just speak super broadly here. Most pensions probably have about 60% stock, 40% bonds. Again, speaking in complete generalities right now. And that's what, most like 55 to 65 year olds, that's what they have. If you're watching this and you're 55 to 65 and that's what you have, please go to my website, because we can get you into something better. But anyways, enough with that shameless plug. So what has happened is, over the past quarter, let's say they started off the quarter with 60% stocks, and now all of a sudden the stock market has absolutely gotten walloped, and actually some of the bond market's gotten walloped too. So maybe now their 65% allocation might only be 45%. I'm just, again, making up a number here. Well, what they need to do is by the end of the quarter, they need to get that back up to 60%. And so what they need to do is they need to come in and they need to buy stocks. Now, if we go over here and actually look at the article, it's saying traders have attributed a big part of the move to what we first said more than a week ago would be forced to buy pension funds who are mandated to buy as much as $850 billion in stock for quarter end to offset the underperformance of stocks relative to bonds. Now, a week and a half ago, QDS forecast $160 billion in month-end equity buying as pension and asset allocators would need to reallocate their portfolios. Since then, the S&P, wait for it, is up 10% and up 17% off the Monday lows. Our models now suggest $50 billion still to buy globally, with $25 billion in the U.S., and while that figure is still large, much of the impact may already be priced in. So I don't know if that resonates with you, if that makes sense, but essentially what's going on is that these pension funds, their stock allocations have gone way down from where they were before to start the year. They are mandated to keep it at a certain level, so now they're forced to come in and buy. That forced buying, could have been what a big contributing factor, along with the fact that the Fed threw everything and the kitchen sink at this. And by everything, I mean they've lowered rates down to zero. They've lowered the reserve requirement down to zero. We've got a $2 trillion emergency CARES Act stimulus, another $4 trillion that somehow is being dispersed on top of that. And then the Fed is willing to do whatever it takes. Other central banks around the world are willing to do whatever it takes. And eventually this whole whatever it takes attitude, this whole, let's just get them on as much economic heroin as possible, is eventually going to kill the patient. But, who am I to say this? We've got Jim Grant. He is the author, or he comes out with the, I think it's called Grant's Interest Rate Observer, which should be a pretty easy job now because the interest rate is going to be zero forever, in my opinion. And I will say that, John Sneisen, who, also comes on the broadcast, we did a video where it was Larry Kudlow, Trump's chief economic advisor, where Larry Kudlow actually said, and this is probably, I don't know, maybe it was like last April. Anyways, not important. What he said was, the rates are never going up during his lifetime ever again. Now, granted, he is kind of old, but, he's not super old. And with, the fact that, you've got somebody that's, I don't know what he is, like, let's say 68, 70 years old, saying rates are never going up. And I was completely in agreement with this. And, we did see that briefly the 3-month treasury was actually negative, but we got Jim Grant saying he's in favor of life going on and that the Fed shouldn't be doing something amid this massive global shutdown. And they are just making it way worse. We have a debt crisis problem. When you issue new money, you are creating debt. Most of that debt is going to the Federal Reserve, which is going to have to be paid off by, our tax dollars. And then meanwhile, the bankers and the politicians and all the lobbyists, they get paid trillions of dollars. We get paid $1,200 a piece, which, for every family of four, we end up paying $60,000 of debt that we have to get settled with, but we get $3,000. So, I guess I am a financial advisor, but it doesn't take a financial advisor to figure out that is a bad deal. Now, another issue that's going on, coronavirus sparks U.S. dollar dilemma for China as Federal Reserve ramps up easing. So China is the world's second largest holder of U.S. government with about $1.1 trillion worth of bonds. Now, I'd like to point out that the top holder of U.S. government debt is actually the Federal Reserve itself, which is why I thought, going back to May 2018 when I had a video entitled "The Perfect Storm is Brewing," I knew there was no way the Federal Reserve could try to sell $50 billion of bonds off their balance sheet a month. And now it's gone from, oh, how the hell am I one of the only people out there to realize this, to now, oh, we're just buying $100 billion worth of securities a day. So they tried to BS us into thinking, oh, we could sell $50 billion a month. And I'm like, well, who the hell is going to buy this? The largest buyer of the Federal Reserve debt has been the Federal Reserve. Oh, you're going to now become the biggest seller? Oh, and then by the way, your second biggest buyer is China, who we're in a trade war with, and your third biggest borrower is Japan, who is the most indebted first world country in the world. I mean, call me crazy for not thinking that plan would work out, but that's exactly how things have turned out. And another thing we see here is that Putin and Trump agree that oil market situation suits neither. And, I think that they're absolutely right. But, maybe now this shows that Trump is a Russian agent, saying this, facetiously, obviously. And,
well, it's not just them. It's also Saudi Arabia and Iran that are involved here. That, of course, Saudi Arabia now officially announced that they're going to be overproducing oil. This is why it's only very close to $20 a barrel, which is absolutely crazy right now. Also, another thing I kind of wanted to ping off of you a little bit here, Tim, is China now is also reporting that their manufacturing activity is actually expanding, and it's not there's no contraction, as they're saying. But in the United States, they're saying, according to Goldman Sachs and their numbers, they're predicting a 34% contraction in Q2 of this year for the U.S. economy. How do you see this kind of playing out on the world stage? Because again, as we know, China manipulates the markets just like the United States does. The Chinese government is intricately involved in all the major corporations in China, and in the United States also. The United States is very involved with a lot of the major top corporations. But again, what the United States is doing is they're intervening. The more they try to prevent this major fall from happening, the worse the fall will be. But what do you make of this latest kind of geopolitical assessment of China reporting positive numbers while Goldman Sachs is saying, 34% contraction Q2?
Well, I mean, one, it has to do with China, and they saw, a massive ramp down, and now because they had a big, I guess some would say a draconian lockdown of everybody where, they can't really do that in America. They can't go around welding people's doors shut. So they were able to get, a handle of, what's going on with the C word a lot better than America. And so they have seen their factories ramp up. However, we are in a global economy. A lot of the S&P 500 that Trump likes to tout, a lot of the big Dow Jones industrial averages that, even we mentioned here, even though I think the S&P is a better way of measuring the economy. And actually the better way of measuring the economy is really the Russell 2000. And the Russell 2000, that's, so the big Fortune 500 companies and the S&P 500, they, drive a lot of their income is going to be from overseas. Obviously America is a big chunk of it too, but they get a lot of income from overseas. And so just because something, could be triggered, because something is going wrong, let's say everything is going great here in America. Obviously it's not, unless you look at Trump's campaign slogan for Keep America Great, but you go overseas and because things are going better over there. Well, this is a worldwide connected economy. A lot of these companies are over leveraged everywhere. And so, by them getting, a little sick and all of a sudden, okay, well, we've got to, we can't, afford to pay as many workers for 2 or 3 weeks. And it's an entire shutdown where now they have us by the what because, they have all the politicians, all the lobbyists, and yeah, so I mean, I do expect, the number next month to be horrific. We see here on screens, I'll get this right now, that we've got, Tom Barrack, who's probably one of the top real estate, guys, has a big fund from, Colony Capital. And he basically in this video goes on to say that, the worst is yet to come in America, that, wait till, April. That's when things are going to get really bad. And we're not going to have to wait too much further. We've got April coming tomorrow. Then at the end of April, once we get the April payroll reports, that's where I'm really expecting the bloodbath, to go on. But now some people are being, and I feel like I'm not really seeing it too much from at least my clients. But again, most of my clients are voluntarist, people that have been red pilled, people that, watch alternative media. So, it's not necessarily a great, but I do have more of like the normal people as well. And so I think a lot of people are not, really, more people I think would be rather prone to going to cash rather than thinking that now is a great time to invest, just from like a high level of what I'm seeing at boots on the ground. And maybe it's because they realize that, everyone's getting their, $1,200 stimulus checks, or I guess not everybody, but, $3,000 per family. And then that money's, essentially gone before they even get it. And then that's going to have a, temporary boost to the economy, but that's very, very temporary. And the bigger question is, whether these companies can, afford paying their bond payments. And so cue the Federal Reserve to step into buying all the bonds. But, we have Yum Brands, which that's, I think who is it, like Pepsi, KFC, I'm not sure if Taco Bell's in there as well. I think they are, but they had a very successful bond offering, this week. So they were trying to raise $500 million, and they actually, I think had people commit up to like into the billions. It was like 5 or 6 times oversubscribed. So I guess that is a good sign temporarily, but maybe because people, associate Yum Brands with a more reputable brand, supposedly maybe that's what's going on. And then we do have, up on screen, SEC chairman, we shouldn't be banning short selling even as coronavirus drives big market swings. And I got to say, I do agree with him. Not every day I agree with Jay Clayton of the SEC, but, I think there should be, short selling. I don't necessarily think there should be manipulative, short selling that's going on. But this is something that blockchain can help. I mean, I know Patrick Byrne of formerly of Overstock.com, launched a company that was basically designed to prevent against this sort of predatory, behaviors. And it's a very fascinating story, which I do have some interviews with some people on T0 specifically, not making any recommendations, just using this want to highlight the fact that there is technology out there that's coming that can help alleviate a lot of this stuff, but they don't want to have the people have technology to help alleviate this stuff, because they don't want to have blockchain be voting, because they want to be the ones who control and manipulate it. And I forgot if it was Stalin or Lenin, but it's he who votes does not matter, it's he who counts the votes. And then you can debate whether voting even matters anyway, because we always get two bad choices to choose from anyways. And I'm more of the opinion that it doesn't matter. However, yeah, it's a complete what storm out there. Everything that I've been warning about is now coming. Eventually we're going to see negative interest rates, because we can't afford, companies can't even afford to pay the debt they have now. Mainly the government can't afford to pay the debt we have now. And so they think, okay, well, if we just have a negative rate, then that's going to make it easier to pay our minimum payment. And so as a country, we can't even afford the minimum payment. That's why we've got to do BS things like, institute negative rates, which we don't have right now. But that's a sign of where things are coming. And unfortunately, I do want to divorce the term economy from stock market. Two completely separate terms, but unfortunately those terms have been married together. And Trump right now, the only thing that he's been touting when he got in there is how great the stock market is. I knew they were going to pull the rug from him, which is why podcast episode number 1 talked about, do not try to keep this bubble going. They're going to rip it out from underneath you. Saw this happening. I mean, it's so frustrating being in my vantage point right here, and probably a lot of our viewers' vantage point, of just knowing that you should not, if you live by the sword, you die by the sword. Trump lived by the stock market, now he's going to die by the stock market. And unfortunately, a lot of us tried to prevent against this. A little bit too little, too late. And at this point, I think it's going to be, Cuomo winning a brokered convention with Kamala Harris. Either way, I think Kamala Harris is somehow going to, sneak her way in there in some form or fashion. But, yeah, just bad news all the way around.
I mean, potentially, if there is even going to be an election, which some people are actually
mail-in votes now. But this
points a very interesting political perspective, especially with Donald Trump, which again historically says that if the economy is not doing well, the incumbent president doesn't do well as well, especially during political elections. If they even happen, everything's up in the air. We still don't know a lot, but I think one thing is sure: if we had capitalism, this storm wouldn't be as severe as it is. We don't have capitalism. We have socialism for the rich. Donald Trump is continuing that. CNN is pushing for that. All the other people are pushing for that. And these are truly, absolutely bizarre times. Perfect time to team up with you, Tim. Pichette.
Everything's going to everything. Maybe it's because everything's going to Pichette. So the world out there, but it's Pichette.
I just have a bad time pronouncing it. But if you're enjoying the show, share it with your friends and family members. And I truly appreciate everyone tuning in. Stay tuned for more every single day here on the Change the News channel.